Hi there, Joe Vitale from American Retirement Advisors here with a weekly market update. Now, stocks better than expected U.S. growth propelled domestic stocks higher in the shortened trading week. The S&P rose 1.04%, while the Russell 2000, which was benefiting from their larger exposure to small cap stocks, climbed 2.28, and the Nasdaq gained 1.72. The overseas international, the EFA, edged up about 0.52, and the emerging markets declined 0.80. Within the U.S., consumer discretionary and technology stocks led the indices, while energy and utilities were the lagging factors. Now, in fixed income, interest rates and bond values were virtually flat last week across all the government maturities. The year-to-date 10-year yield on the benchmark is down 91 basis points, driving their values up 9.4% since the start of 2019. In commodities, oil prices fell last week after Iraq's prime minister resigned, increasing the likelihood that the country will restore its production, thus raising global supplies. So Texas crude ended the week at 55.17 a barrel, down 4.5% for the week. Now, in economic data, the U.S. economy grew at 2.1% annualized rate in the third quarter, which was up from the initial estimate of 1.9 and a slightly faster pace than the prior quarter. With the new estimate, we also saw a larger than expected rebound in durable good orders in October, which should help calm the worries about future economic growth, which has been under pressure from the tariff war with China. Now, durable good orders for October rose 0.6% month over month ahead of expectations and now up for the fourth of the last 5 months. This follows 1.4% decrease in September. Now, shipments also rose following 3 consecutive monthly decreases, which is encouraging for the economy. Looking at the misery index has reached a 4-year low. This is the sum of the unemployment rate and the inflation rate, which is currently 5.4% together. The peak in the misery rate occurred during 1980, which was at 22%. So market valuations or the forward price earnings ratio in the S&P are highly correlated with the misery index, and the lower the misery, the higher the valuations in the stock market. Let's look at company news for a minute. Alibaba, which is a G33 holding, shares rose 7% following a blockbuster listing in Hong Kong last week, in which the company raised $12 billion, offering the year's biggest globally, and showed confidence in Hong Kong despite all the political unrest over the last few months. Now remember, all the positive indicators, whenever the president speaks, you see the market just go crazy, whether it's up or down. Anytime he says anything regarding tariffs, the market just goes up or down like nuts. The key is to keep your head. Look at the fundamentals. Look at all the indicators that are happening and make sure we have to stay the course. And if you're properly allocated, you're going to be fine. So if you have any questions on recent market news and how it's going to affect your portfolio, give us a call, 855-756-5700. Thanks and God bless.